The setup for Bitcoin has arguably never been this bullish, with Bitcoin treasury companies buying Bitcoin at an astounding rate, following the lead of Mr. Michael Saylor, who now owns over 600,000 Bitcoin for MicroStrategy. We also have DJT, Donald Trump's company, amassing $2 billion in Bitcoin out of their $3 billion in available cash. I think it's clear to say that we have a marriage here between what's happening with institutions and the United States and Bitcoin. How long can this last? Are these actually top signals? We're going to break that down. And of course, everything happening in the macro. It's Macro Monday after all. Let's go.
Let's go.
Without further ado, we're going to bring on Mike, Dave, and James to get the show started. Mike, we're going to start with the morning meeting, but man, it's hard to talk about much other than Bitcoin and crypto right now. But we should still frame it with what's happening with the macro.
Yes, that's good because it is a summer market. Not a lot going on in terms of Stuart Hall, our senior economist who works around and Wong, pointed out obviously the inflation number was a little bit better expected last week, but monthly core is running 2.3%. It's too hot for the Fed. He pointed out retail sales surprised the upside, but there's been downward revisions, and tariff price increases were a big part of the recent uptick. Personal spending growth is running below 1%, which is quite weak. Doesn't really see that improving. That's big of a problem. Inventories of new homes is very high, and he expects at the Fed meeting this week, Fed Waller is going to dissent. And the key thing is we'll see if any of the other members dissent with him. Gina Martin Adams pointed out S&P 500 earnings have been good, but not the price results. The forward forecast is only being revised upward for tech. Most are vulnerable. She pointed out that U.S., I think I mentioned this last week, U.S. is valued at 55%. Other global equities, almost the highest ever, still quite high. And she pointed out a lot of risks in U.S. stocks. Ira Jersey, our chief interest rate strategist, pointed out that curve steepening is likely to continue. Fed versus Trump, that's a good sign for, or Trump versus Fed, for a curve to continue steepening. Our FX strategist, Shirley Volkboff, pointed out that the ECB meeting this week might be a dovish hold, expects 2 to 3 more cuts are in store, which is going to be a problem for the euro and may be good for the dollar as we get those yield differentials widening. I pointed out, I dug into crude oil a little bit, just pointing out the season of the crude oil market. It's a bear market. I don't see what gets it above 80, and it's probably heading below 50. Most notably, this crude oil, if the stock market drops. I was in the grain belt, corn belt last week, just massive supply. It's a wonderful thing. Weather's good. Should see more pressure there. Copper's been the outlier. It's pushed up on tariffs. Question how long that's going to last. It's only U.S. copper around 560. In Europe, it's trading $1 below that. It's the risk. And gold is still the main commodity that's going up. 3,400. I'm pushing 3,400 an ounce this morning. To me, it's a bit of an indicator that gold is not really buying into this U.S. stock market or Bitcoin rally. It's still outperforming, certainly this year. And to make gold go lower, got to have that stock market to keep going up. And then there's a risk that as we get towards the more volatile part of the year, that we get a little correction. And I just point out some of the ratios. The gold crude oil ratio at 50. If we end the year there, that's 50 barrels of crude for 1 ounce of gold. That would be the highest year end ever. The highest 2 records in the past was around 39, and that was in 2020 and 1934. So pretty unusual. And then I just point out that Bitcoin to gold ratio hovering around 35. Dave loves this one, but it's still it's still below that peak from 2021, and that used to lead beta, and it's been lagging for a while. So I'm sticking with gold, and I pointed out that it's not a good indication that the rock this year, the first year of Donald Trump's administration, is actually beating well ahead of stocks and still beating Bitcoin. Back to you.
So I just have to jump on that one thing because I keep making the point. The reason that I've been calling for 300,000 Bitcoin is because that would match the euphoria from 2021. Okay. Honestly, that feels very conservative right now. Now, why do I say that? I say that because in 2021, we hit much higher levels of Bitcoin versus gold, and the adoption of Bitcoin is at least 5 to 6 times higher. And that's really it, because if you look at it, the people who are adopting Bitcoin, the people who are buying Bitcoin, not the ones who are selling it, the ones who are buying it, for the most part, think Bitcoin will get to somewhere within, it depends on the range, 75% to 90% of gold's price, of gold's market cap, which would make the ratio a hell of a lot higher. So the fact that since 2021, we're sitting here in the same range tells you we haven't even gotten close to euphoria side part of this market, given where adoption is. And we could debate whether or not the adoption is real. I mean, okay, we have the Secretary of Treasury of the United States effectively declaring himself a Bitcoiner without using the word Bitcoin, in the Walter Bloomberg point about the Fed argument this morning. And that's definitely something we have to talk about. We have the president and his family of the United States basically saying they're Bitcoiners. We have the head of the largest asset manager in the world saying he's a Bitcoiner. So yeah, but none of that was true in 2021. And yet here we are now. So that is a really important, simple ratio to look at, and that's the core of an investment thesis. Is that a trading thesis? No, Bitcoin is stuck in a range. It's still stuck in a range, burbling where it is, and it's almost a classic alt season, and we'll see how long it lasts.
Yeah, I was just gonna say, I don't want to interrupt. I just want to show the chart because it's stuck in a range, but this is Bitcoin dominance, right? And in past bullish cycles for crypto, not just Bitcoin, this is what happened. Bitcoin hits a new all-time high. Bitcoin goes sideways a few percent off the all-time high, and altcoins go nuts. And this is the largest drop in Bitcoin dominance I think we've seen in a week in literally years. So,
well, but let's put a bow on this one for Mike, because every time Mike uses the word beta, I cringe. But this is beta. There's no question about it. The beta of the S&P, of the Bitcoin vis-a-vis the S&P and Bitcoin versus that stuff, that thesis is deader than, well, it's deader than what you find inside sarcophagi. It's just, there is no frigging beta from Bitcoin to the S&P. If anything, it's been less volatile than most of the Mag 7. But the real beta in our market that we cover here is crypto versus Bitcoin and crypto versus tech stocks. And that's very, very real. And so, and you're seeing that now. And that's the cycle. And as I said before, it's notoriously unstable. It changes, but it's undeniably. Now, this isn't, this basically shows something, another thing that Mike says has the kernel of truth to it, which is, it's not that there's 2 million competitors to Bitcoin. But there's no question that within the crypto ecosystem, that altcoins, I don't like the word compete, but at the end of the day, it's still money. People are taking some money off the table in Bitcoin and putting some into alts looking for higher beta. And is that a long-term competition? I don't know. But what do you think, James?
The reality is, I think one of the really good point here, and to kind of turn it on its head a little bit, is we have not seen retail euphoria in Bitcoin yet. We haven't. And you know that because Google searches, the headlines, people talking about it. I haven't heard people talking about it in grocery stores or at the gym, or you're just not hearing about it. And so, and anybody in the comments, please let me know if you think you've heard euphoria, because I have not. I don't see it. And one of the important things about this and what you're talking about with the beta to Bitcoin, with the altcoins, is that you would think that, well, Bitcoin is a gateway drug to the altcoins, but that's not really the case. The case is like Mike points out, the one thing you do point out astutely, Mike, is that Bitcoin has tens of thousands of competitors as an entry point for retail investors, because they don't know the difference. They really do not know the difference between Bitcoin and all the other garbage. And so they're going in and saying, well, Bitcoin's $110,000, $120,000. I'm not buying that. It's over. I need to buy something that's 50 cents or 12 cents or $3, because that's going to get me juice, because maybe that'll become $100,000 and then I'll become rich. And that's literally the mentality of it. I mean, I've been speaking with friends and family for years about this stuff, and it's difficult to understand unless you really dig in and go down the rabbit hole. And, if you've done a good job of the people around you, they do understand it. but you can see how difficult that hurdle is if they're not doing the work themselves, and that's just reality. So what we have seen is we've seen OGs selling and getting, monetizing their HODL strategy, which they've been doing for many of them for over a decade. And so here you are, you've got how many coins came this weekend? 80,000 from one seller. Was that the number, Scott?
Yeah, it was 80,000 tokens. He sent them to Galaxy. There was 2 weeks of conjecture as to who it was. A lot of people thought it was actually Adam Back sending for this SPAC. It wasn't. A lot of people still saying Roger Ver. But yes, somebody literally unlocked 8 wallets with 10,000 coins each, sent them to Galaxy without any test transactions, and sold them. And
Boom.
Here we are still at 118,000.
And monetize being a billionaire, overnight. And it is understandable. That person may have other wallets that we don't know about, and it is understandable that somebody wants to take it and go buy houses or cars or whatever they want to do with it and say, I'm done. I'm going to redistribute this wealth in another way. So that's not really surprising. But the reality is we haven't seen that retail craziness yet. And that's why what we're seeing in the activity in altcoins, in my mind, it's kind of an indication of that.
I think you make a great point. And having been here for roughly 10 years, 9 years, my first cycle when I came in, the only way to access altcoins was to buy Bitcoin. Right. So you bought Bitcoin on Gemini or Coinbase, then you sent your Bitcoin to Bittrex because you were in the United States. Binance didn't exist yet. And you swapped your Bitcoin for Ethereum or XRP or whatever the new hot thing was. Nobody knew what those were. You had to be very crypto native, or at least getting the rumor. But everybody's gateway back then was Bitcoin, 100%, because there was no way to access the rest of the market. There were no stablecoin pairs. You couldn't buy them. That changed entirely in the 2021 cycle when people started trading altcoins in USDT. And you'll remember almost everybody who came into crypto came through either buying Doge or an NFT, not through Bitcoin. And that has remained the case, James, to your point, I think now. So I think there's been a wild bifurcation of the market that didn't exist in the first 8 or 9 years that Bitcoin existed, that now is there. But a lot of people are still stuck in the Bitcoin gateway mentality. I think there's more of a chance that people find Bitcoin through buying other things and realizing how dumb they are than they find dumb things by buying Bitcoin at this point.
I agree. And, and that's clearly what we're looking for here. And that's where Mike, I think the only point that when you point this stuff out, what I differ on you on is clearly is that Bitcoin does not react to the altcoins. It's the other way around, and so
I would say at this point, I would almost make the argument, as I think through it, that the ETH altcoin comparison now is probably more accurate than Mike's Bitcoin to all other altcoin strategy. I think if you're trading altcoins right now, you're trying to beat ETH because it's going up. So you have to be concerned with whether ETH, because they are, a lot of them are competitors directly to Ethereum. I just think there's Bitcoin and everything else. But I mean, Mike, I don't know your thoughts, but that's how I view it now.
Well, to me, let's focus on the big picture macro. I stick with the premise I had at the beginning of the year that the best for Bitcoin and cryptos have been priced in. You typically don't want to buy an asset when the masses love it, which is what Dave points out. I get it. It's great. You want to buy an asset when Michael Saylor discovered 2020, Bitcoin was at 10 grand. Now it's above 100. President loves it. I get it. They jumped on board to help him get elected. But you look at the actual performance this year, it just sucks. I'm sorry. Risk adjusted. This year, I get it. It's a point in time, but it is the first year of a significant new administration. Bitcoin's up 26%. Gold's up 29%. Sticking with the rock. And unfortunately, I hate to say it, but it's keep beating. But that's an environment with the S&P 500 up about 8%, which is the historically annual gain. You got to have that. That, to me, it's the key thing for the whole crypto space. Bitcoin is just a little bit different. Obviously, it's the first, but then we do point out there is about 19 million now. Call them what you want, but there is that many. Unlimited supply. Just look at it as a commodity guy. Sure, there's competition. But the point is, this year, if you've been allocating to Bitcoin, you have to realize that past performance is not indicative of future volatility, and Bitcoin's reached near the lowest ever versus the gold and versus S&P 500. Why? Because it's in the main space, in the mainstream. Once you got into ETFs, it's in the mainstream now. So just I'll finish with this. I think as long as you can assume the stock market's going to go up the end of this, just look at the rest of this year. Let's say we're in December, end of the year, we're doing macro Mondays. If the stock market's up, say 10, 20%, yeah, Bitcoin and alt should be up. What if it's up only 2 to 3%? To me, that's what you're doing here. If you're buying Bitcoin now, you're buying leveraged stocks, and its performance is showing just that. I don't see a big difference so far. Just the difference is people are looking at what it used to do in the past, and you can get Dogecoin, it's worth 40 billion, but you can buy that at fractions on a dollar.
Which is why I would say that the 4-year cycle is kind of dead. I think that, the significance here, Mike, is past performance is not indicative of future results, especially with something like Bitcoin, which has only had a few of these cycles. It's a very small data set. And the difference here is that you have you now have institutions and sovereigns who are wading into this market, and that changes it entirely. So it's very difficult to know exactly how this is going to play out. One thing we do know is that Bitcoin has been very closely correlated to the expansion of the money supply and liquidity in particular. And we know that it lags it a little bit. And the reality of the fiat world is we have these vicious expansion and contraction cycles in liquidity and debt. And so, debt just keeps expanding ad nauseum, but the liquidity around it is it can be violent in some of these contractions. And so we will still get volatility in Bitcoin. And I think we will get up and down cycles. It's just, I don't think they're going to be correlated directly with halvings, and probably not directly correlated to elections unless we start getting socialists elected around the world, which is possible, as we were kind of joking about before the show even started in Manhattan or in New York City. But there will be cycles. There will be expansions and contractions of liquidity and credit. And I do believe that Bitcoin will follow that. And why is that? Because it is literally the opposite of fiat. And so if you want to protect your money, you buy gold or Bitcoin. I mean, there's just really, you can buy real estate, but there's a whole lot more, there's a handful of headaches that go along with real estate. And they're extraordinarily interest rate sensitive. So, I do believe that you're right. The future is, you can't be predicted by the past. I agree with that. And especially because of Bitcoin's nascent nature and its changing dynamics. And it's going to be very different this next 4 years, I believe.
I just want to talk about really briefly before you jump in, Mike, the setup, because Bitcoin has never been this bullish, right? And we've had it repeated here, and Matt Hogan said it, on a risk-adjusted basis, this is probably the safest time to buy Bitcoin. Doesn't mean there's necessarily the most upside, but just digging into why price is going up, I mean, it's pretty simple. I'm just going to cook through a few stories so we get them out of the way. We got the stablecoin legislation. We know that market clarity is on its way. Charles Schwab plans to launch Bitcoin Ether spot trading, CEO says, and said very vocally they're going to directly attempt to compete with Coinbase. Trump Media, 2 billion of their 3 billion in liquid holdings is now in Bitcoin. Michael Saylor buys 6,220 more Bitcoin. Crypto investment products see record 4.4 billion in weekly inflows. Jack Dorsey's Block, which owns Bitcoin, set to enter the S&P 500. Peter, that we will save that one. And then, of course, the title somewhat coming from Brandon Lutnick, Howard Lutnick's son, pushing Cantor to go all in on crypto. SPAC says, I want to be sitting at the heart of crypto. I don't think there's ever been a better time to be pro-digital assets than right now. I know that's a lot. And I know that Mike, I know that when you're in markets, those can be glaring spidey sense top signals happening. But to me, the fact is right now, there's just a hell of a lot more buyers than sellers.
Well, before Mike jumps in, I want to repeat something from the 1998 through 2000. 100%. When those IPOs, when you've had when the cycle is there and the investment banks are using IPOs as currency, allocations of those stocks, that's the Spidey Sense top. The Spidey Sense top isn't people filing for the beginning and one IPO. I mean, this feels much more like 1996. Circle feels more like the Netscape moment from 96 than it does the pets.com moment from 2000. And this is the hill I will die on rhetorically, because I've seen this before. So, it's funny with Bitcoin treasury companies, people are so scarred in the crypto world that they're looking for the top signal to be terrified to get the hell out.
I'm coming around, by the way.
What do you say?
I'm coming around even, but yeah.
No, I'm just saying that's what happens. And markets are funny that way. Everybody is terrified in the beginning. You have to climb a wall of worry. We haven't had it. But yeah, BitGo, Bullish, going to add, all the things you're talking about. Hell, I mean, I'm not going to lie. I mean, I'm the second largest shareholder in a crypto company that would be in the Russell 2000 were we a public company. So clearly, and I'm looking at this saying, this is good. Someone should figure this out and figure out how to monetize it. That's true. That's what every single person in the crypto sphere is going to look at. But why does this matter? And I'm sorry, Mike, you'll get to talk, but this is an important point, because so many crypto tokens that people are used to trading are complete vapor bullshit. When you're in equity with real earnings, it's different. I mean, I had an argument on Crypto Town Hall last week. You might remember it. Someone talking about Pump.Fun. They were all jazzed saying how great it was. It's real earnings. And I asked this bull, I said, listen, dude, what percentage of those earnings do you get by owning the token? What's the economics? I don't know. I'm like, what the fuck? What do you mean you don't know? You're buying a financial asset without any clue what your economic rights are. That's bullshit. And frankly, people are going to say the same thing. Now, Mike will say the entire crypto sphere is that way. I do not. I think quite a few crypto assets are going to have economic models that will create supply and demand, Bitcoin being the most obvious. But why the equities matter is because the equities are going to massively outperform, and the people in crypto aren't stupid. And so those governance tokens are going to quickly turn into economic tokens. And what does all this mean? Well, this means you have to start hiring armies of lawyers to figure out securities versus not. So what's the other thing that happened last week? Well, gee, we had a much larger Democrat, join over in the Clarity Act, because what is going to happen, and this is with 100% certainty now, you're going to get a market structure bill. Paul Atkins and the SEC and Jamie, Selway, who runs trading and markets, are going to be full on writing rules for digital asset securities that allow Coinbase, Kraken, Bitstamp, etc., to compete in that market without getting rid of them. That is going to happen. You're going to see the ability for U.S. customers to be able to buy these things, to eliminate the risk to people. That is certain. Now, it might not be until 2027, but it's going to happen. And so investors are smart, and they're going to start looking at this stuff. So what you'll start to see is this trend. Now, I know this is a big rant for a Monday morning, but we saw this all last week. And when Mike starts talking about 2 million competitors, my thought is maybe there's 50 that have real value. And what's that? 1,900,000. You get the joke, that are complete fluff that are going to fall away to nothing, or be memes trading around, and who knows what they'll be. But I think it's really important to distinguish. I'm sorry, Mike, for jumping in front of you, but you can frame it within.
Your rants are priceless. And not only do I learn from them, we all learn, but our audience does. So thank you. And also, it's a thing I learned day one, starting in the business in the late 80s. I got to be contrarian. I got to be against consensus and point out different things. Or else I add no value to clients, to my trading, to investing, particularly to this environment. So first, I want to touch base a little bit what James said about liquidity. Don't underestimate what's happening with liquidity. The number one source for liquidity on a global basis, bar none, the biggest in almost history, is U.S. stock market going up. If we just drop that 10, 11, maybe 12% or so, that's the liquidity thing. You might see massive pumping of liquidity from a prime pumper like the government, like what's happening in China right now. But that's the only thing that matters for liquidity when they get to these levels. We're at that unique stage in history. So I like to point out, as far as money supply, in China right now, current money supply is around $46 trillion. That's double the US. They have to do that. They have to pump the system liquidity just to lift out the massive deflation From the stock market, we saw obviously bounced a little bit this year, but 20 years unchanged. Certainly from housing, it's what we've seen in Japan a while ago. So that's what's happening. The key lessons I like to point out is you always get pretty significant deflation from inflation. Now it's just a question of when. Now, China, it's happening. The rest of the world's happening. And then I like to point out what Scott said. Everything Scott said is classic selling when they're yelling kind of stuff. I mean, I love Matt Hogan. Matt Hogan and our friends, but he's selling a product. I used to sell products too. I get it. He's, and obviously he's making money if that product people are buying and it goes up. So just remember what's happening here, what people are doing. And then I just take out performance. This is what I've done with the stock market for a while. When you see the rock beating stocks and all you see on CNBC is nothing about AI driven stock market, that's a problem. It still is a problem and it's still beating stocks. It's happening with Bitcoin now for a while. I'm just pointing out facts of performance. You get a much better performance this year with a much lower volatility asset if you had stayed with it. And still, I think it's going to be kick in by the rest of the year. Now, if I'm wrong, if I'll come December, yeah, I got to stop out and move on. But that's still the case this year. Bitcoin's so great. I get it. Why is it not beating gold? And I'll stick with gold. And that's the point, is when you hear people doing the lands, look at me, I made money doing this and you can too. It's just a classic case. I remember one key example was in commodities when the whole world says, oh, you got to buy commodities. They diversify your portfolio. This was 20 years ago. Rowan Gert, it was the Facts and Fantasies. And that put in a bit of a peak for decades. It's just the way things work. Remember the housing market? It wasn't supposed to go down after 2006. It did. It's the widely read narrative. I hear from everybody now how you have to buy Bitcoin. That's great. I love it. That's when my spidey contrarian sense comes out and says, yeah, when Trump administration hated it in the first administration, that was the time to buy. And now that they love it, well, good news is, as long as Trump administration is successful and there's no bumps in the road, cryptos will be okay as long as the stock market's going up.
Again, though, Mike, we haven't seen retail euphoria in Bitcoin. We're picking out headlines because we're paying attention to them. We are really paying attention to the game theory that's going on at the corporate and now sovereign level. So I just shared a chart here, Scott, and this is Bitcoin, over gold. So what time period do you want to pick out here, Mike? Just pick out the time period. You can see clearly that Bitcoin is just eating gold alive. And so if we just look at 2025, sure, but Bitcoin, look at where Bitcoin ran before 2025 against gold, from the election forward. And then it had
just draw a line from the middle. What's the trend? What would a chartist call the trend line? Yeah,
the trend line would
that is a bull market. No, I agree with that.
But it's been a bull market for a very long time. Do you want me to go all the way back? Because if I go all the way back to 2009, it gets ridiculous. But just look at where it is,
So I know it's a classic, the best techno signal ever. You have to buy it. It went up, so you have to buy it because it's going to go up. Just point out that high we made in 2021 was on the back of a 100-year event, the biggest money pump in history in COVID. Yes, we should have pumped
right here,
gold
right.
Okay,
and so
we're still at that same level. My point is, but beta has gone up to record highs and continues to record highs. That's weakness. That shows divergent weakness. My point is, as long as the stock market, now we switch. The point is that chart used to lead beta. Now it's lagging. Okay, yes, it's a point thing, but the point is that beta, I just keep thinking, you have to point this out. The stock market's up 7% this year. Bitcoin's up the risk adjusted amount, gold's up a lot more. As long as the stock market keep going up, that chart will go up. That's the point.
Okay,
we might have reached that inflection.
I disagree on that, and here's why I disagree. Do you believe that the money supply is going to expand or contract between now and 10 years from now?
As long as, of course. Well, we know the answer to that, but remember, I just pointed out what's happening in China.
That's why we have to keep
it's double the U.S., but the stock market's gone down. That's the point. Is we've potentially. Do you believe that history it's different this time? That you'll get to 2.2 times GDP in the stock market? It's not going to matter. From the future, you're going to say, "Well, gosh, that was just on the way to 3 times GDP."
No, but I think the difference between you and me is that I don't think we've learned our lesson. I think that we are a terminal patient that is hooked up to a series of drugs, and those drugs have to do with liquidity and expansion of money supply, and we cannot stop it. So my answer is, I believe that GDP is going to catch up to the stock market before the stock market falls apart to collapse, to mean revert, as you say, back to GDP levels. I believe that we're going to continue to expand the money supply and continue to expand liquidity to have those metrics come more into line. And it may be both. Maybe we'll have a little bit of a pullback, but it's not going to be a 20-30% pullback in the stock market, in my mind. And if it is, it's going to be momentary, because they will flood the market with a print. And that's just reality. I don't think it's not about whether or not we've learned the lesson. It's about the fact that we have no incentives to do the right thing from the White House all the way through every single chamber of Congress, every single committee, and every single individual legislator only cares about one thing, and we've said this before: they care about getting elected. They don't care about their people. We see that because of what the things they do and say. You think that Elizabeth Warren cares about the people? No, she cares about getting reelected. And she's obviously owned by big banks, or else she wouldn't do the things she's doing. And so, it's not about them learning the lesson. It's about them not being able to take away those drugs because the patient will die. And that patient is the U.S. Treasury. And the U.S. Treasury can't die, or the whole world collapses financially, the entire world. And so the whole point of stablecoins is not to get banking access to individuals, or it's not to it's not to allow the people to have access to more yield. It's to enable the banks to offer a way for the Treasury to get more treasuries out to any nook and cranny they can stuff them into across the entire world. That's all they care about.
Yeah, could I riff off of two things here? So one, I want to take us in a new direction and talk about what Besant and the administration have been saying. But the point that you keep making, Mike, about it's not different this time, etc. Bitcoin is, you guys are tired of me talking about an option, but the fact is Bitcoin is evolving. It is still a baby. It is still worth a fraction of what it would be if it grows up. When it grows up, it is pari passu with gold. Gold going up,
the size of gold in 15 years versus gold being used as money for thousands of years.
That's right. But the point being that as gold rises, that's bullish for Bitcoin. Full stop. That you just have to ask yourself the question: if you're a Bitcoin bull, do you want to see gold go up or down? The answer is up. Now, do we think that over time, just like the chart James put up, that Bitcoin will eat more and more of it eventually? Yes, I do think that is true, but it is a long time thing. There are people out there, until the boomers in every country are all dead, until I am literally not able to talk anymore. There are people who will hold on to their gold as yellow rocks as their store of value forever. That is not something that happens immediately. So people in the Bitcoin world, oh, Bitcoin's going to leave gold in the dust in the next 2 years. They're out of their fucking minds. We're talking generations. We're talking generations of people who believe gold is a store of value for holding on to and maintaining purchasing power parity. And it's done a great job with that. It's done a horrible job of being the value standard for the entire financial economy.
Don't forget, Dave, it's U.S. centric mentality. Gold is store of value across these regions that are oppressive.
Yeah, how about India? It's the largest store of value in India, which is the world's largest growing economy. I mean, it's not just there. But the point here is the Bitcoin gold ratio is really a question of, and I keep saying it, does Bitcoin live or die? Does it succeed or fail? We're not at that point yet, but it certainly feels like there's more likelihood of success. And that's why we talk about that. But every argument you use for the shiny rock is applicable to people who are younger than the four of us as they look at storing value and understanding. So that's thing number one. But thing two, it is so important to look at what's happening with the Fed right now. You have the Secretary of Treasury who was an avowed Bitcoiner before he took the job. He gets the joke. This is the most powerful man in the economy, and he gets the joke. He knows that the only way out is to grow and pump nominal GDP as fast as humanly fucking possible. At the same time, you push as much inflation into financial assets, including treasuries, as you can vis-a-vis consumer assets or consumers. This is not great. This will create more wealth inequality, but it may very well be the only way out. And that is why they're pairing this with populist policies. You know, the Democrats and the media that support them are so disingenuous, it's beyond belief. I mean, I'm not fully, Republican pilled here, but let's face it. What are you seeing? The tax bill that just passed, the only differences were for no tax on tips, no tax on overtime up to, $12,500 and $25,000 on tips, things that are to try to improve the standard of living for Trump voters. All the quote, giving stuff to billionaires, bullshit. That's just continuing what we already had, lest they derail nominal GDP. And so, this administration is trying to walk a dance. And it's really important that they've been doing it to try to pump nominal GDP without costing them votes by increasing wealth inequality. Understand that's what has to happen. So if you think that's what they're going to do, and by the way, the Democrats, if they manage to win, are going to realize that they need to do the same thing, because they have. This has been bipartisan. Right now, they're doing it for political points. But as James puts it, if you want to get elected, you don't cause a recession or a depression. You just don't do it. And so we have a world where for at least the next 3 years and a half, we have an administration that wants to pump GDP, pump financial assets, notably treasuries among them. And in doing so, try to unleash productivity so that consumer inflation won't be as bad. That's what they want to do. Now, whether they'll succeed or not, I don't know. But if you want to ask yourself, what's the official policy? That's what we saw. So that's what the budget bill was. Rescissions will go after some small pieces, but they're not going to be able to really cut spending. They have to grow their way out. So where does this leave us with the Federal Reserve? Well, the Fed is an independent agency. That's what they say. What it really is a group of private bankers who have control of the economy that lean Democrat, and it's a war. And it's a war where they just gave ammo to the opposition by spending, trying to spend $2.5 billion on an office building. I don't care if it has asbestos. You could literally bomb it and build a new one for half that price. We build football stadiums for $1.5 billion, right? It's unconscionable, and they are going to eat. That is going to be the thing they're going to use, and they're going to use it relentlessly until they can get the political acumen to start auditing the Fed. And when they audit the Fed, and you start finding out how much private bankers make money because of their coziness with the Fed, when you start looking at all the receipts Caitlin Long has had, a lot's going to happen. If you don't realize that a fundamental reshaping of our economic policy is underway, you're not paying attention. Now, I think that to me is unbelievably bullish for Bitcoin. I'm not saying it's necessarily all going to be good. It won't be. There's going to be lots of bumps along the way, but we are going to have a fundamentally reshaped economic policy here. You take this one to the bank. If there's any alpha in what I'm saying this morning, if I'm right, invest accordingly.
I want to show you guys something while we're discussing this, because in the midst of this, obviously our favorite topic of conversation is treasury companies. We had the announcement this morning, Pantera Capital backed Ether Machine to go public via merger with 400,000 ETH on its balance sheet for treasury strategy. Bang. Launched today, just like that. Look at that chart. Now, the question is, when you look at these, how could a company that's dead, Dynamix, have this many people to sell on this much volume on the day it launches? It's curious. Don't know how we can figure that out. But if anybody's wondering how people are making a lot of money, this is alt season. Right.
But understand the backdrop here. But Mike, I'd really like to hear your comments on this, because I know, you think we have an independent Fed, which I think is complete nonsense. I mean, the rate cut last year was the smoking gun as far as I'm concerned in terms of politics, but it's private. The Federal Reserve chairman is nominally and not by the chairman, but the board of governors, it's a private organization. And, the markets like the fact that it's independent. Sure, they do. And so that's why I think the other stories this morning out are Trump isn't going to fire him because he's listening to aides, namely Scott Bessent, telling him, don't do anything precipitous, let this all play out.
So I think it's very important, Dave, what you said is putting Trump and Powell and the Fed in the same statement as gold. My first thought is Bitcoin. I start with gold. Anytime I hear Trump pushback on this traditional form of separation of the executive branch and the Fed, at least in theory, I think, all right, well, if you're going to push back on what's really got the U.S. exceptionalism, the U.S. premium and asset prices the highest in history, good luck. It's like good luck with, I'll stick with gold. And so remember what's happening, and let's remember the facts of performance. Cryptos and Bitcoin are a risk-on asset. Gold is a risk-off asset. And the fact that gold is beating cryptos, certainly the Bloomberg Galaxy Crypto Index only up about the same as S&P 500 this year. That sucks. That's bad performance.
Mike, can I ask
a year
you a
like this,
question?
I got to finish this point.
Sorry. Yeah.
But you keep me making how great it is. Everybody's buying. We pointed out last year was a watershed year in cryptos. We got that. Now it's just kind of, I think potentially, yeah, we're making record highs, but all that other stuff is kicking in. Remember, it's July. So to me, it's very important to look at what's happening and what markets might be telling us, not what the sell side people is going to tell people are going to be buying more of this asset. Just be very careful. It's telling us, gold is telling us there's something wrong with all this bullishness. And the key thing is, one thing we also have to remember is the last president who got elected with the stock market this expensive was Herbert Hoover. Let's remember the facts of what I understand. Everybody knows what the Trump administration wants, but how much can they do to make things more expensive when they're already doing a major cutoff on what's really got the U.S. stock market expensive? And that was earnings, partly because they could offshore and buy and bring in stuff cheap and adding a tax to that via tariffs. That might be a hurtful for earnings. Now, it's obviously not happening yet, but the bottom line, you have to, I think, in this standpoint, is I can't even have a view on cryptos or gold or crude oil or copper anymore without having a view on the stock market first. It's got to go up first.
Mike, I guess, so I have two questions historically. So how many times have we seen gold perform exceptionally well when stocks are actually still up? Wouldn't we anticipate, pardon my ignorance, but wouldn't we anticipate if gold is on a historic run that stocks should actually be suffering? Typically, also in the Herbert Hoover days, I guess is my next question. How much QE and money printing did we have?
Well, so that's the key point is, and I want to mention that to James, we will get money printing when risk assets go down. And that's my point. When risk assets go down, which so far it's been wonderful, the risk.
But what you're seeing, Mike, is that you're seeing a collective around the White House trying to push for liquidity before we have that drawdown because of midterm elections coming up, right?
Got it. Yeah. In the meantime, why is gold beating the whole crypto market and certainly beating Bitcoin? That's my point. Yes, they're trying to do it. We all get that. Everybody in the market, it's a known. We can talk about it. I mean, it's a known in markets. How much can they do it? That's my point. If you look at the actual performance of markets, the fact that gold is doing this, and even bond 10-year note yields are down 30 basis points on the year. There's something ticking in. Like our economist pointed out that actual consumer spending is just very recessionary. 1%, it's nothing. How are you going to fix that? Right now, it's transition. So yeah, I get it. The midterms, of course. But key thing for midterms is you want low energy prices. That's happening. Low bond yields. And by the way, if the stock market corrects 10%, it's much more likely going to get that. And we know 80% of stocks are owned by the top percent of the population who do not vote for Mr. Trump. It says 55% of the population, which are wage earners, and just got a cut on the taxes on tips and Social Security and overtime. Yeah, those people are more concerned, I think. If you get those yields lower where they can refinance mortgages and you get the price of gasoline lower, sure, I'll vote for Trump. But the stock market for them doesn't matter as much.
All right. But if you take out the Mag 7 from that stock market calculation, it's a completely different world, know? So, and that is an important thing. Yeah, I know most people own those things because most people own ETFs through their retirement funds, 401ks, IRAs, and all that stuff. But the reality is the vast majority of companies are not overpriced, not to that level. It's the Mag 7s that are driving all of it. And that's reality. And the second thing is that, we can pick and choose what time frame you want to compare gold and Bitcoin. But the reality is Bitcoin made a massive run prior to gold even taking off. And so I've been waiting for gold. I've been advising people gold. I own gold and waiting for it. And finally, it finally got a lift this year. And so, but I've owned gold long before I ever owned Bitcoin. And now my preference is clearly Bitcoin. It's not even close, but that's me. But because I believe that what you're saying, I agree. Here's the problem, Mike, and this is why we have a hard time arguing with you, is that I agree with 98% of what you're saying. I just disagree with a few key points that are critical. And that's where we differ. But there's no learning from this. And I just believe that we're not going to wait for the stock market to crash. It could on an event. You could have a black swan, and that's always a risk. I mean, like we've talked about before, we had 1987, we had 1990, 98, 2000, tech bubble. You had the 2001, 9/11. You had 2008. You had 2020. I mean, you have a 100-year event every few years. So to not expect there to be a black swan is ignorant. We should expect something. But on the backside of that, I think it's going to be a V recovery and ridiculous amount of printing, like Larry Lepard likes to say, the big print. And he wrote all about it because there is no way to stop this. There's just not possible.
Okay, so last week's obviously big story was will Trump fire Powell or not, right? Or can Trump fire Powell? Did he write a letter? Did he not write a letter? Okay, I don't think we need to unpack that. But I think it's fair to say that even if he doesn't fire Powell, which I don't believe for 1 second that he's going to, Powell is going to be gone next year. And whoever Trump does put in is going to print the hell out of money. Right. So they're going to definitely throw gasoline on this fire, whether it's today or next year. Mike, I assume we all agree with that in theory, or at least that's what they want to do. Correct.
Yeah.
Exactly. But Scott, can I push back a little bit about the fire part? It's like people keep making the mistake of assuming that consumer inflation, while correlated, is causally related to asset inflation. It is not. It is absolutely not. We've seen this for 40 years. CPI is very sensitive to two things that have absolutely nothing to do with money printing. It is sensitive to energy cost, which Mike points out all the time, and Mike could easily end up being right-ish. I think 50 may be tough with the denominator of dollars going up, but energy prices, technology has improved. It is way cheaper to extract it, and regulations are coming down at the same time. So energy is not going to be feeding into consumer prices as long as we don't get more war in the Middle East. So that is very important. Second, productivity. With AI and everything that is going on in the world, to assume that we are not going to get another burst of another holdback on consumer inflation at the same time we're inflating the money supply is also delusional. So yeah, you may see consumer inflation hanging around 3% and asset inflation going back way above trend again. There is nothing in the world stopping it when you cut interest rates. This notion that you allow people to refinance their homes and all of a sudden that's going to stimulate aggregate demand and that there's no slack in the productive side of our economy is just, it's been demonstrably wrong for 40 years, yet people keep assuming it. And the Fed's models that I like, the fact that they have 20,000 employees and maybe 10 of them have common sense is insane. Honestly, I could probably have taught a college level economics class, taken the graduates after a couple of years and staffed the economics departments of the Fed and come out with economic models that were at least as accurate. Frankly, I'm not sure monkeys throwing darts at dartboards aren't as accurate as the Fed has been. But for them to have missed for 40 years that aggregate demand is only one input into inflation is beyond insane. And so, yeah, I'm pretty pissed off at the Fed. I think the Fed should be gone. I think an audit, a real audit by a real organization would basically say, yeah, these guys are all basically digging holes and filling
Dave,
it in.
we're conflating two things. I just want to say, like, the president firing the Fed chair because he doesn't like his policy is very different than the good old Bitcoin, like, abolish the Fed because
no. I'm in between
for hundreds of years.
But that's my point, Scott. Yeah. The Treasury Secretary also, Scott, told him, don't do it. Let's get political wins to audit these guys and let the Congress go to work and let Democrats die on the hill of defending it. They're not going to, by the way. Elizabeth Warren might. Now, she won't die because she just got reelected. But, you know, they're not, the Democrats are not going to die on that hill. They are doing this smart for a change, right? They're letting the papers go at it. They're letting the talk shows go at it. They're letting it build. But the momentum to starting to understand what the Federal Reserve does and invalidating it is what's happening. These things don't play out over days. They don't even play over weeks. We're talking months here. Mark my words, by the midterms, there will be momentum to, at a bare minimum, audit or investigate what the hell's going on in that building, in that organization. And people will start to learn that it's a private company. Why this matters is it means that the people at the Fed who want to keep their jobs are going to start realizing they're going to need to play ball sooner rather than later. But I do think that it's entirely arguable that it's not throwing gas on a fire, that it's a fire of financialization. Yeah, that I think we all agree.
The fire is already raging. People are starting to realize that the whole you know, all the information coming out about this $2.5 billion renovation of a building is just the tip of the spear. You know, I wrote about this a few weeks ago. The operating budget for the Fed last year was $10 billion. $10 billion. Just think through that for a second. You've got 12 regions with what, 24 branches of banks. You have 21,000 people that work for the Fed. What? 21,000 people. What on earth?
Those banks
do we need 21,000 people to manipulate money?
And how much money those banks make by getting a favorable interest rate free of risk from the United States government simply to hold the money.
Right. And at the same time, the Fed has run up a $240 billion bill, $250 billion bill that it's got to pay back the Treasury before it starts, giving its profits to them. I mean, so the Fed is creating a larger deficit. It used to help the deficit. Now it's creating a larger deficit. This is a major, major problem, and people are waking up to it. And, the White House is waking up and they're putting pressure on them about it. And so that's what Bessent is doing, because he wants to be able to, have his yield curve control in order to, like Dave said, deflate away this bond problem before it gets completely out of control. It is already raging. This fire is raging. The spending at the Fed is raging. The ridiculous number of employees they have, it's raging, and they're starting to figure it out. And so in the Fed, it's Bitcoiners love that, but I think it extends far beyond Bitcoiners, and it's going to go mainstream this year, in my opinion.
Gold, by the way, loves it too. Let's be really clear. That's the thing. I mean, it's literally the same trade. It's just that one has an order of magnitude more upside than the other, but it's the same trade.
Yeah.
And whether we're right or wrong or not, time will tell. But our belief is it's the same trade. And the point here, and this is why, from a macro point of view, this is Macro Monday. The macro situation in a world without a central bank cabal controlling the money, controlling everything, is very different. It's not necessarily better. I think it is better, but there's going to be bumps and bruises along the way. This is not going to be smooth. This is going to be bumpy, rough, political. There's a lot that's going to happen.
Yeah, it's going to be vicious. You're going to have a lot of volatility. And Mike, I appreciate that you're sitting at Bloomberg, and if I were you, there's very little you could really say about this subject, because it is a touchy subject with mainstream media, and I get it. But the reality is the Fed is a problem. It is a massive problem. It's only getting worse, and people are waking up to it. Hopefully they wake up to it fully this year.
Well, one thing I think we can appreciate from the Trump administration, they're at least attempting to purge a lot of those bureaucratic excesses. I mean, we needed that, and hopefully it'll continue. And the best thing I think is, it's the best thing I think sometimes you just cut off a lot of stuff, and if it's that important, replenishes it later. But what I want to point out, one thing you pointed out earlier, is I've always viewed owning gold without Bitcoin in that space would be inconsistent and ignoring what's happening in the world going digital. But there's times to overweight the rock, the low volatility risk off asset, and there's times to overweight the crypto, the high volatility risk on asset. And the fact that this year, in a risk on year, that Bitcoin's still underperforming gold, to me, those are the signals I've been looking for. I'm worried about that we've reached near the end game of this high volatile speculative digital asset. Now, I have to point out my outlook. My outlook initially was years ago, once we had launch of widely disseminated ETFs in the US, that would be a bit of a peak in cryptos. I still stick with that. I've been early, can say wrong, but I look at this space needs excess. So for me, for now, the way I'm looking for a bit of a bottom is when we have a bit of a purge of the excesses. Now we're seeing massive speculative excesses right now. You can disagree with it all you want in Bitcoin, but looking at a $40 billion valuation of Dogecoin, we will look back from history, and blame me if I'm wrong, is that was about $40 billion too high. We need a purge in this space. We need to find out that you can't just put Bitcoin on your balance sheet and then your stock goes up 2 or 3 times. Like it's at that stage, I think now. Again, everything's fine. It's July, stock market's doing fine. Let's think of how things are going to be towards the end of the year. To me, the indications are you should stick with the risk-off assets.
Here's my mentality around it. We believe as Bitcoiners that Bitcoin is not a risk-on asset, and we believe that eventually the world figures that out, and eventually that it overtakes gold as the premier store of value asset of the entire world, the entire global financial system. That's the bet. And we're willing to ride out the volatility between now and then because we believe that that is the end game. And what may happen before that, and I hope it doesn't happen, is that we have a violent collapse of the entire system because of the stupidity that we have from the people who are manipulating the fiat currencies. And if that happens, good luck to everybody. Gold will go to 70,000, but Bitcoin will eat up most of the financial markets because you're going to find people are going to need somewhere to go with their capital in order to preserve it without hyperinflation across the entire world. I hope we do not get to hyper Bitcoinization in a violent move. That would be terrible. I think that would be catastrophic for the whole world. And it would make a lot of people poor, and it would be an ugly world to live in for a while. I don't want that.
So,
what
James,
I would like
James, where are they going in China?
What's that?
So where are they going in China? What you described, what we're having in China is a severe deflationary normal reaction from emerging market that grew too fast. We've had one of the biggest bull markets in history has been in the CGBs, Chinese government bond markets, 1.68. That's where they're going in China. In the U.S., well, we're still buying Bitcoin. I just say good luck. Hopefully we'll be okay with that.
Well,
that's my point. Where are they going to go?
Gold. Yeah. It's interesting. We're buying Bitcoin and gold, and so let's see.
No, I pointed out.
But China is but you have to understand something about China. That's
market. I mean, that's a big macro. People are going into bonds.
So, Mike, you talk about China a lot, and for very good reason. And there's a lot of important information in what you're saying. But the United States, is different than China in multiple respects. We always talk about, creative destruction, but we kind of don't allow it anymore. We allow zombie companies, but it's on a really small scale. China has zombie cities. They literally built enormous amounts of infrastructure with no utility simply because there was so much money that people built it, employed it. We've never done that. I mean, yeah, we get the occasional bridge to nowhere. We get empty shopping malls. We get stuff that happens.
We could use more housing. Let's face it.
Yeah, we actually are short of housing. China went and just built and built and built. The answer is, it's sort of like, why did the chicken cross the road? Why did China build excess cities? It's because they could. Now they have all this we call this malinvestment in economics, where you invest your productive capacity in things that are not necessary because rates are artificially too low. So of course, what's their cure? Their cure is to cut their rates even lower and inject even more liquidity into the economy. But it's exactly what James and I was talking about. The general economist tone for this is pushing on a string. The other analogy is it needs more and more drugs to keep things going. They have no choice but to either keep pushing or just say, okay, we don't care, and just allow it to collapse and then just dust themselves off and get back up again as they build their capacity with more STEM and engineers and more stuff. But the reason why we're not hearing about Chinese tariffs and people are realizing is they're realizing that China put themselves on the wrong foot. And it's like if you're a negotiation is like jujitsu, right? What is the first statement of jujitsu? Use your opponent's momentum and power against them. Well, that's what's going on here. China built too much productive capacity, and as you adroitly have noted many times, and it's very important, they now have deflation in the consumer side and inflation on the monetary side because they have no choice. And that's what's going on. And this too shall pass. But right now, that's what you see. That's one thing we don't generally have in the US. I don't think there's a whole lot of, condo buildings sitting empty, right? We don't have that problem. Maybe Miami is going to have.
We did that in Miami. Yeah.
We did it
15 years ago.
Yeah. But it's nothing. It's the scale is different, Scott. It's orders of magnitude more in what they did in China. And so, yes, everything Mike is saying is true. And the question is, and you also, although you haven't said it in this show, you also extol the virtues of our system versus a one-man system in China, which is also a big deal. So you're right about that. And so all of that, what does all that mean? Not sure, but it seems likely that it means more liquidity coming out of China and more productive capacity coming out of China at the same time, which, oh, by the way, is disinflationary for the rest of the world.
Yeah. I know that we're over time. Yeah, go ahead. Go ahead.
I mean, it's just the key thing is we're going to see major technological competition out of China, as Jeff Booth pointed out, which means earnings. I mean, you have to have tariffs to protect yourself from China. It's not just U.S. The whole world now has to protect themselves from massive deflationary forces come out of China, and then being able to do some of what our tech companies do, but maybe cheaper.
Yeah, I mean, just circling back on Bitcoin as we conclude, I just still see right now more demand than supply. I don't know if that's indefinitely, but I find it hard to see announcements like this. I brought this up. Charles Schwab plans to launch Bitcoin Ether spot trading and saying, aiming to attract clients who want to consolidate crypto holdings with their traditional assets. I mean, this is really the holy grail of any asset class, is that you can go buy your Bitcoin and Ethereum on Charles Schwab and then use it as a part of your entire portfolio to take loans against. I mean, it's just very hard for me not to think that at least we go a bit more higher, a bit higher at some point in this cycle with all of this, because these people haven't even been able to buy it. I don't know. We'll debate it for another time, but that story just kind of got washed, because I think it happened on Saturday, but just absolutely incredible what's happening in this market. Guys, I love the debate. As always, really appreciate all of you. Mike, looking forward to seeing people walking back and forth behind you in the Bloomberg offices soon, but enjoy the rest of your vacation.
Next week.
Other guys, see you on Monday. Thanks, guys.